Gold has shattered yet another record. For weeks, the precious metal has been on a relentless climb, up more than 12% in just 1 month, a surge among the strongest since the 1980s. The bull run is being fueled by big money, futures traders placing aggressive bets, ETFs overflowing with demand, and central banks quietly building stockpiles. But overnight, something far bigger emerged. China, the world's largest gold consumer, revealed a bold move. Through the Shanghai Gold Exchange, Beijing is inviting other nations to store their sovereign gold reserves inside Chinese vaults. The message is loud. It's about reducing reliance on the US dollar, about challenging the dominance of Western financial hubs. London, New York, Switzerland, countries worried about sanctions and/or sudden economic shocks see this as an offer too tempting to ignore. Beijing has been laying the groundwork for years, launching offshore contracts in Hong Kong, easing import restrictions, pushing the yuan deeper into global trade. And demand isn't just coming from governments. High net worth families are loading up. Everyday savers are converting cash into bullion. And first-time buyers who have watched from the sidelines are finally stepping in. Goldman Sachs cautions that the rally may have overshot. Speculators are everywhere. But China's hoard, combined with accelerating retail demand, could absorb any short-term selling pressure. Here's where America comes in, and the historical perspective matters. Not long ago, the US played a major role in global gold flows. Gold was shipped from London and Switzerland into American vaults, driven by demand for safety, price premiums, and financial strategy. In early 2025, the US imported significant amounts of gold, mostly from Switzerland, reaching the highest monthly Swiss exports to the US in over a decade. Investor concerns about potential tariffs drove a surge of shipments, as buyers wanted to secure bullion before costs could rise. Later in 2025, the US did impose a 39% tariff on Swiss gold bars, impacting the market and reminding the world how policy can quickly shift flows. America has been reactive, not proactive, in the global gold race. Meanwhile, China is moving to become a custodian for other nations' reserves, positioning itself as a power center in bullion markets. The twist, the challenge. If nations trust China's vaults over traditional Western hubs, then gold is not just a commodity anymore. Its influence, its leverage, its financial power. The US must ask itself, are our vaults, our markets, and our systems ready to compete? Can we ensure trust, security, and liquidity in an era where alternatives are emerging fast? Because history shows that when sentiment shifts, gold moves quickly. Those tons that once flowed from London to New York didn't wait. The next wave could flow to whoever provides safety, stability, and certainty. Gold isn't just a metal, it's a statement, a claim to influence in a changing world. And remember, this story is for information only. It is not financial advice.